welcome to Convos with Mortgage Peeps, presented by Learn to Lend. I'm Bobby Hanson, and today I'm conversating with Julia Sanchez, Senior Mortgage Advisor at Empire Home Loans. Julia brings over 30 years of experience in the mortgage industry and has built a career not just on knowledge, but on relationships and consistency over time. She's worked across operations, underwriting, mortgage insurance, sales leadership, and a loan officer. And she has so much to share. I'm so excited. She can talk to us about what actually happens inside a deal from every single angle. And that is such a unique perspective. So I'm very excited to get into it. If you haven't already, please be sure to subscribe to the channel so you don't miss anything. Especially if you're newer to the industry. So let's go ahead and let's get into it. Welcome, Julia.
Thank you, Bobby. I'm excited to be here with you this afternoon. And thank you for the intro.
I know it's always embarrassing to hear those things about yourself, but you have an amazing career. And what I love about this, company that we're creating is that we get to highlight that and celebrate that and share that. So thank you for being here and sharing your time with us today. We always start with the origin story. So how the heck did you get into the mortgage industry?
It was funny. I was working for a chiropractor and we had a couple of patients that had been in a car accident. And one of them happened to work for a mortgage broker. And he's like, "You shouldn't be doing this. You should be doing mortgage." And I went like, "What's that?" And, no clue. And so he's like, "Come to the office and I'll show you." And that was it. Like, there was no going back to a 9 to 5. And so I worked for a mortgage broker. I was supposed to be a loan officer from the very beginning. And when I came on board, the owner of the company went, "Do you want a paycheck like every week, or do you want one once in a while?" And as a single mom, I was like, no, I want one all the time, right? And so I took the path of operations instead of straight into sales. And hindsight tells me that was the wrong answer.
Interesting.
But it also, that experience in operations really lends itself to what I do now, because I can structure a loan, see where the pitfalls are going to be immediately, and then learn how to fix it, right? Because all we're really doing is putting that Rubik's Cube together, and so long as all the colors align and everybody can tell what it is, you go, "Hey, that's a Rubik's Cube. It's a loan," right?
Right.
And so I started with a mortgage broker. I ended up in operations, both wholesale and retail, in different aspects, and then mortgage insurance for about 12 years. And that was fun. I got to meet loan officers all across Northern California. So I saw successful ones, I saw some not successful ones, or ones that were struggling, and I was able to learn from them. So when I made the transition back to originations, it was like, I'm going to copy so-and-so had great ideas, and I'm going to do that. And then I took the experience from the mortgage insurance and went, how do I get realtors to come to me? Because I knew no realtors. I knew loan officers, and they were now my competition.
Right.
And so I went, I'm going to find somebody that's an expert at something that everybody wants. And so at the time I came back to lending, everybody was talking about social media branding, and you got to get your brand out there and you got to be on social media. So I brought a gentleman that was doing a lot of trainings on that, and I invited 60 realtors. I got 20 to the room.
Wow.
And I thought, like, wow, that was a bust, but those 20 told 20 more. So the second time I did it, within like a 6-month period, the room was standing room only.
Wow.
And so that expertise lent itself to me. I already knew how to do loans. I just didn't have any those relationships so that someone could go, "I'd like to do a loan with you."
Yeah.
And so that thing of value that I brought them really is what brought me the realtors. And so that was the start of originating again. And so from there, I've been doing pretty well the last 5 years, and still learning and growing, because I think you always have to be a student of your industry,
Mhm.
and you're always learning new things, guidelines change. And so that's kind of where my expertise always lands, is that I know guidelines change. I never take for granted that I know everything, because you just don't in this industry. But if you just give it your all and try and ask a lot of questions, you're going to be successful.
Oh, I
Yeah.
love that. And it's so interesting because there is no one way to do it, right? It's
No.
every single loan officer, successful loan officer, and success looks so different to everyone, right? But everybody that is doing this and has done it for some time, it is such a unique way to get there. And kudos to you for being like, hey, I don't know how to do this thing, but I know somebody who does it. I'm going to hook my wagon up to them and bring that information. That's so smart. And that's what people need to be doing in the industry. Don't wait for somebody to tell you the thing, create
Yeah.
the thing.
Yeah. And when you have a presentation like that, when you bring an expert in to do a training, you get to have your own commercial, right?
Yeah,
This is the Julia commercial. And that worked out so well. And I think that, I just looked at my experience, went, what can I bring? How do I attract that energy and the people that I want in my life? Because I hadn't done this in years. Like, I hadn't originated. I went
right,
operations and then mortgage insurance. And the mortgage insurance was the sales, right? And
right,
that was great. But knowing that I could get a room full of people and then just talk about myself and my experience and what I brought to the table, right? And it's not always just the experience you bring, it's the willingness to help people,
right,
to go that extra mile, right? And
right,
that, I think, is what is unique to each individual, is like, do I have that fire in the belly to go out and create something? Because it's not just going to come to you. You got to go get it.
right, right.
And yeah,
Nothing comes
so
easy. Nobody's going to hand you anything in this business. You
no.
think somebody's going to be like, hey, here you go. Very wrong industry for that. But I
Yeah.
did want to touch on a little bit. You said MI, and that is where I met and fell in love with you, was on the MI side. And I don't feel like loan officers always fully understand MI. MI is a big part of the game. You can
Right.
save deals, you can strategically structure deals. So if somebody is new to the industry, what would you say to them about mortgage insurance?
So mortgage insurance is the reason why people can buy homes sooner.
Okay,
They don't have to save the 20% down, right?
right,
And really understanding how to price the mortgage insurance, because it comes in different sizes. FHA, as we know, is government insured. So FHA, VA, USDA all have an insurance, whether it's called mortgage insurance, a G fee, or a funding fee. That is how we insure those loans. And the government does that. On the conventional side, it's private mortgage insurance, it's private companies. And so they have a menu, just like you would go to Starbucks and you're going, what do I want? Do I want a monthly premium? I pay a little bit every month. Do I want a one-time fee? And maybe I can do that with my seller credits and just pay off the mortgage insurance so that my payment stays low. I mean, there's a whole menu, right?
right,
And you got to learn what's best for your borrower. And know that it's on the conventional side, it's not a forever thing.
right,
It's cancelable. And so sometimes you're going, okay, if I've got a borrower looking at FHA and I've got a borrower looking at a conventional loan, which one suits them better? Is because conventional really is, you have to learn like where the sweet spot is. And
right,
if you've got a high FICO, you're putting more than the minimum down. more than likely your payment execution is going to be better on the conventional side because of the mortgage insurance.
Right.
I always tell everybody FHA is like buying a shirt, one size fits all. It might look great on you, but it's too big for me or
Yeah.
it's too small for somebody else. On the conventional side, it really is one or two borrowers, high FICO, low FICO, how much of a down payment. All of those things get factored in
Mm-hmm.
so that you can reach the monthly payment. And sometimes even though the rate on FHA is lower than a conventional loan, that
Right.
mortgage insurance can be a lot lower. So your payment's like just about the same. And then
Right.
you got to go cancelable or
Or
non-cancelable,
not.
life of loan, not life of loan. And when you start explaining that to borrowers and really understanding
Mm-hmm.
how the mechanics of mortgage insurance works, then you're able to lay out the benefits to your client. And so I'm glad that I'm able to do that and I can explain how to cancel it and when you can cancel it, what the rules are around that. And really that again is just part of being an informed loan officer, being a student of your industry, making sure you understand the things that you're talking about.
Right.
Yeah.
Well, yes. So definitely understanding MI and doing that comparison, like you said, is so smart to see which program is better. The other thing that I have come to know about MI companies is they can be a new loan officer's best friend. They have
Yes.
so many resources available when it comes to calculating income, understanding VA loans, how to fill out the 1003. I mean, there's a lot of training material too that the MI companies offer. And your MI reps are the friendliest people. They are the most willing to come out and support you if you're going to have an event and you have nobody else. Your MI rep will be there to support you for the most part. They're just the friendliest groups of people. And so I wonder from your standpoint, being in that, why is that? Like, why do they do so much of that for the industry, do you think?
Because nobody wants to talk about mortgage insurance. That's so boring. It's like, I don't want to talk about mortgage insurance. It's everybody looks at it as a forced have to thing, right?
Right.
And the last thing anybody wants to do is talk about mortgage insurance. But do you have trainings? Do you have marketing material? Can you show me how to calculate income? All the things you mentioned, they provide that as a free service
Yeah.
in hopes that when you're ready to price out, you're going to price out their company and go, I want my loan to go to this particular company.
Yeah.
Because it's six of them. It's not like it's a lot of them. It's six. And so when you're competing for loans, which we were as MI reps, you were trying to bring things of value. The same way
Yeah.
that I brought a trainer to talk about social media, MI reps are trying to do the same thing. Let me bring you something of value so that I'm of service to you. And you in turn have that gratitude and repay me in the form of loans,
Yeah.
right?
Yeah. That's the
Same,
name of the
same,
game, right?
yeah. We do it with realtors on the loan officer side, right? It's not, I always hated the term donut dolly, which is what a lot of the MI reps were called,
Yeah.
because they would walk in with, donuts
The
and you're
treat.
going, and I refused. I went like, I'm never buying donuts, I'll buy you croissants, but I'm not buying you donuts. And so you have to bring something of value. It's not
Right.
just about the lunches and sponsoring events. It's you have to bring value. And I think that's what our industry should be is how do I bring value to my realtors, my borrowers, my other partners, and how do they bring value to me? Because, I have vendors too. Who do I get insurance quotes? Who do I, send for flood? Who has the most competitive prices for my clients so that we can keep the mortgage payment down? And that's again, who is asking you for your business?
Right.
Who's bringing you value and who also is, we want a little speed in our industry, right?
Right.
Everything's always on a clock. And so, who can you count on to be there when you most need them? And
Right.
so that's how I look at it. I think, we're here to provide a service. with all the internet companies and stuff, you don't know who's behind there. But when you can come into my office, shake my hand, and I will hand hold you and walk you through this transaction, the biggest investment of your life, I should be the expert and in explaining everything from mortgage insurance to interest rates to loan programs, and then also find out what your goals are in life. You might want to become an investor, or
Right.
you might just one house and we're done. But those goals, as a loan officer, you really have to dig deep at
Right.
and connect with your clients so that you're giving them that service that they desperately want someone to give them, right? An internet
Right.
company is not going to do that.
Right. Right. They want to be person to person.
Yeah.
So I guess my next question for you is, we talk of service and value, but when you're new, you might not feel of value, or you might feel like, oh, all the things that you tell yourself when you're new. And we hear a lot of people say, get comfortable being uncomfortable, like go in, just do it, get out there and talk to people. But what would you say, to the new loan officers in the industry? What is, a few things that they can do that they might not be aware of that they can do in being in a new space?
Again, going to where they can get classes and learn the basic steps, right? We all revisit the basics every once in a while,
Yeah.
right? We have boot camps that say back to the basics. It's because you do have to have that foundation of how to take a loan application, how to review that credit, how to do the income calculations, and then being able to go, okay, which loan is best for you. And sometimes it's not what you pick or you think, you just lay the options out to the customer. And you don't have to know everything. I didn't know everything at every stage of my career,
Right.
but I had the willingness to go, I don't know that answer. I raised my hand and went, I don't know, but I'm going to get an answer for you. I'll come back. And whether that was selling mortgage insurance, doing loans, being on the operations side, because that changes as well. You always had to be willing to go, I don't know, but let me find out. And then do the follow through, right?
Right.
If you go, I don't know, and I'll get back to you, and then dead silence, guess what happens? You've eroded trust. And so this is still a relationship and trust business. And so you don't have to know everything. You just have to do those things that don't cost any money, showing up on time, following through. There's basics, things that don't really cost you anything.
Right.
But be a student of your industry, because every time that you turn around, something does change. And if
Yeah.
you keep up with that, then you're going to be a resource that people want to come to.
Right.
And I'm known for rescuing loans that other loan officers can't do.
Well, it's
And
not surprising with your
yeah,
background. I imagine you could pretty much do anything at this point.
well, I don't know about that, but I try. And that's the thing, is that I do try. But when you get that phone call and a realtor goes, hey, I've got a deal that's going south, and it's like they give you the particulars and you're going, oh, okay. Like, I would have to look at the documents, but I'm pretty sure I know where you're getting stuck at. And a lot
Right.
of times it is income, right?
Right.
And there's tons of tools. Use your resources. I mean, there's tons of apps and different things that will analyze credit for you, will look at the income for you. But if you know how to do it,
Right.
then you're going like, okay, I'm just being validated here. And so
Right.
you do want to learn the steps of how, but once you've got the hang of that, use your tools to be efficient, you know?
Right. Right.
Yeah.
But don't use the tools without knowing how to back into it. Right.
Well,
The internet could go down and you still have to, know
yeah,
how to do things. Or a lot of times, garbage in, garbage out. Right. So if
right.
you put in something, the system isn't going to say, hey, are you sure? Did you do that right?
No,
You know?
no,
Yeah.
it's garbage in, garbage out, exactly. So I mean, I still have a notepad full of longhand math,
Yeah.
and I still do, I go, yep, they're right. I'm comfortable now because
Yeah.
that's how I feel comfortable. I still know how to do it.
Right.
I still have that HP calculator that
Yep.
sits on my desk collecting dust most of the time. But
Yeah.
when I want to double check, I know how,
Yeah.
right? And
It's like a
so
trophy now. We should have them like
at
on
the
our,
Smithsonian, yes, they're
yeah.
like a Smithsonian item
Yeah.
because they are antiquated. We used to have charts before that,
Yeah.
and you kept that around. But now we have so many tools. It's learn the basics, learn how to use your tools, go that extra mile,
Right.
provide the things that other people aren't going to want to provide, like being on time, being able to say, I don't know that, but I'll follow through, because that follow through is free,
Right.
and
Right.
it's really what matters, because at the end of the day, you're trying to build trust in all of your relationships, whether it's realtors, buyers, people that are refinancing, and you want to be able to give good advice because people do deserve that. I mean,
Right.
everybody should have good advice, and we know from doing loans that sometimes they don't always get the best advice. So
Right.
try to be that person, the one that always gives the good advice, and then you'll always be busy, right? Like
Right.
I would say third of my business is from past clients, and that I don't have, decades of past clients. I have about a half a decade of
Yeah.
past clients. And so to have that many come back, you're doing something good. And that's just being honest, giving them options, hand holding when they need it, and then letting them decide. Because at the end of the day, when you give somebody a mortgage, they have to be comfortable with that payment, because that's where we live. We live in our payments, right?
Right. Right.
And and so when you give them those choices and they make the choice because you've held their hand through it, you're not going to go, you're getting this loan at this rate. You're going to go, here are your options. What do you want to do? And if they ask you for the advice, you give them. And ultimately, they make the decision. They're going to walk away feeling like they were supported, and you got them to the finish line. So I think that that's like one of the things that I always take very seriously is like, it's not my loan, it's their loan. Make sure they know what their options are and let them be part of the process.
Oh, I love that. I love
Yeah.
that. I did want to just touch on a little bit of our current landscape of the industry. I mean, we're definitely not going to get political here today, but I do see in talking to, a lot of currently seasoned loan officers, I talk to people and, everybody's like, how is your business? How's the business? And a lot of people say, you know what, I've got loans, but they are the hardest loans that I've had in my career or in the last few years. Is it, is everything just harder? I know the rates are up. And there's a lot of people sitting on the fence. There's a lot going on, but how do you feel about kind of where we currently are today, and how can we warn, help new loan officers come into this?
You're not going to get warning signs for me. I'm a half full glass kind of person. This is a
Okay,
wonderful time to come in to the industry, especially if you're young, new.
I love
We're
it.
we're an aging industry, number one. The average age of a loan officer is in the 50s, right? And so we're not going to last forever. But as much as we all think we're going to be here forever, we're not, right?
Right,
So this is a great time. And rates are normal where they
right,
have been average for the last 40
right.
years. And so those twos and threes, they were same as a crash, right? It happens once in 100 years.
Yeah,
And so right now, while rates are holding steady, not not super elevated, not really low, we've kind of flatlined in our industry as far as value,
right,
right? Because people were holding off, and the laws of supply and demand still rule no matter what it is, whether it's buying toilet paper during COVID and going like, oh, it's $100 now on Amazon, because I
Right,
didn't go to Costco. Same thing with homes, right? Supply and demand. The more supply there is, values will probably correct themselves a little bit because there's not enough demand, but we have a lot of pent-up demand.
right,
And if the rates come down just a teeny tiny bit, that's always more people jumping in because they're tired of waiting for a new loan officer. This is a wonderful opportunity. And depending on what your background is, honestly, it's like, who do you know? And
right,
who do they know?
right,
And how big can that circle get
right.
so that you are a brand ambassador for mortgage? I mean, and again, that's how I got back into originating. I didn't think I was going to originate, but somebody goes, you're a walking, talking billboard for your industry, and you give away loans left and right. You refer them to different loan officers, whether you met somebody at the airport or you met somebody at the coffee shop. I was forever like mortgage, mortgage, mortgage. And so I would go, oh, go see this loan officer. Oh, in your area, this guy's the expert. And I would refer loans out. And someone goes, Julia, you could do this. And I went, hey, I probably could. So I did.
Yeah,
And not ever having originated because I knew the process. I just
right.
never went out and did that for myself. So somebody knew, who do you know? Who do they know? Start building that circle of influence and start working it, because all you have to do is be your billboard and go, I do mortgages for a living. I'm a loan officer. And my ear is always out. If I hear anything about homeownership or the market or something, I'm always interrupting conversations because I am that billboard
Yeah,
for our industry,
yeah.
because everybody has to live somewhere and
Amen.
everybody pays a mortgage, whether it's yours or somebody else's.
Right,
So why not be the expert? Why not jump in and go, I want to help people with homeownership? And that you have to have a why, right? And most people go, it's my family. And honestly, that's a good why, but it's also our communities, because when you provide a stable home environment for a child, that child graduates at a higher rate
right,
from high school, goes on to college at a higher rate, graduates college at a higher rate, and then they come back and reinvest in their communities. And so it lowers crime, it does all sorts of wonderful things. And I could probably, start crying about it like I have in the past. When you talk about this industry, there are things that really will get you emotional about what you do. And
right,
when you have people a set of keys and you've given them a deed to a property that belongs to them, there's no better feeling.
right.
There's no better feeling. It's the service you do, not just for one person, but it has a ripple effect in the community.
Yeah. That's
Yeah.
so beautiful. I think a lot of this idea of the American dream has been questioned. It may be in the media or whatever, but I live in a loan officer world and I know every single loan officer has that hope and dream for every single person
Yeah.
to be a homeowner, to for their family. We talk a lot about in loans, when people say like, oh, we closed loans, it's like, I helped this many families, and we talk about generational wealth, and it is really powerful
It
to
is.
get in a home, and just what you shared is very powerful. So I know we're coming up on our time, but I do want to ask you two more questions. So
Yeah.
are new to the industry folks, put yourself back in, maybe even your first year when, you were working, that first job, right? That first year. What would you tell people in their first year? What advice can we give them to let them know that it gets better, or to stick with it, or get the heck out, right? Some people might not be built for it, right? Or you
Yeah.
are.
Well, I think you have to have that fire in the belly, right? You have to be aggressive. It's not just going to come to you. You're going to plant seed, and you don't reap your crop the minute you plant the seed. You got to water it, you got to nurture it. And then if you can stick with it for that first year, you're going to see those seeds sprout. They don't always take a year, but that year gives you that year of experience. You're learning, you're growing, you're learning who is going to be a partner, who's not going to be a partner, who you're a good fit with. You're diving into, being an industry expert with guidelines, rates, and all of that. So be a sponge, go out and tell everybody what you're doing, be a billboard,
Yes.
and really just absorb, because there's so much to learn, so much to learn. But be your walking, talking billboard. That's really what you got to do. You got to go shout it everywhere you're at. This is what I do. I'm a loan officer. I'm a loan officer.
I love that. And for now, forever, I'm just going to see you on a billboard. Be your billboard. I love that.
Yeah.
Thank you so much, Julia, for coming on the show and sharing your experience with us today. I know you are out there busy doing all the things, and I'm just thankful you've shared a lot with us. We are going to be back with more shows, so make sure that you subscribe, and we will see you on the next Convos with Mortgage Peeps.
Thanks, Bobby.